At 6:47, as we get ready to wrap up the Lance Roberts Show today, it's the Wednesday Hump Day edition of the show. Already halfway through the week, halfway through the month. Tell you what, halfway through the year. Tell you, I'm halfway to death. It's halfway day.
Halfway day.
So you remember going back now about a year and a half, right after the Trump administration passed tax cuts. I wrote a series of articles talking about why most of the stuff you were told about tax cut was a myth, that it would reduce the deficit, that it would lower government spending, that the government would bring in more revenue because of lower tax rates. And we interviewed Congressman Kevin Brady at the time, who was the head of the Financial Ways and Means Committee and a big supporter of the tax cuts. And he made a very clear, I asked him, I said, tax cuts are great, but they have to be combined with spending cuts. Yes, we're going to cut spending. That's a big part of what we're going to do. We're not going to run up the deficit anymore. And I said at the time, that's not going to happen. What's going to happen is we're going to have a much bigger deficit. We'll be pushing $1 trillion. These articles are all on my website, by the way. If you just go to realinvestmentadvice.com, type in tax cut in the search bar, you'll get a whole series of articles talking about this, right? I wrote about, I even wrote about the problems that were going to come from tax cuts in May of 2017, 6 months before they were actually passed. And those statements I made in May of 2017 have now come true as well. We're running a $1 trillion deficit this year. We're about to pass another continuing resolution in the next couple of months that will add another couple of $1 trillion to our debt. Our deficit is going to approach $2 trillion over the course of the next 2 to 3 years. And this isn't some type of, prognostication. It's math. It's just simply math. And if you do basic math, 1 plus 1, 1 minus 1, you'll come up to the same issues because, when you take a look at what's happening with corporate profitability, et cetera, therein lies your problem, right? Remember that, one of the lies, and I've got an article coming about this tomorrow. It'll be on the website in the morning. But one of the interesting things was that we lowered corporate tax rates from 35% to 21% because we paid the highest corporate tax rate in the world, right? Nobody paid 35%. The average effective tax rate of corporations prior to the passage of tax cuts was about 16%. Today it's 10%. What companies actually pay and what the statutory rate are completely different things, right? Your income tax rate based on your income is, 33, 37%, whatever it is. But you don't actually pay that in a lot of cases because of deductions, write-offs, expenses, those type of things. So effective and statutory are two very, very different things. Plus, we don't have a VAT tax, what's called a value-added tax. Every other country in the world has a value-added tax on top of their corporate income tax. We don't. So the whole thing was passed off on this idea that tax cuts were needed because it needed to make America more competitive because we paid the highest tax rate in the world. Complete, unadulterated lie. The other thing that we talked about, though, and is not in the article tomorrow, although I may slap a little paragraph into this, is you remember that right after tax cuts were passed, we had AT&T come out giving these one-time bonuses that were already kind of agreed to because of their merger. But they said, hey, we're giving every employee a $1,000 bonus because of tax cuts, right? They wanted to jump on those media headlines. And we saw a lot of companies coming out and giving a one-time bonus to employees because of tax cuts. And we said, hey, you know what? Bonuses are that they say, I love you today. A salary, a raise in salary says, I love you forever because once I give you a raise, I can't take it back, right? I guess I can demote you. But in most cases, it's very difficult to take a raise back once I give it to you. But a raise I've got to give to you every year. A bonus I give to you one time. New information out today. Bonuses drop, signaling tax cut payout was a one-time windfall. This is according to the Wall Street Journal. A boom in employee bonuses handed out by some companies in the wake of the 2017 Republican tax cut have proved to be temporary. Exactly what we said was going to happen. This isn't, rocket science, right? That if the government passes policy, corporations are going to take advantage of it. And the one thing that we said then is that if you really wanted to boost the economy, you really need to focus the tax cut on the average middle-class American. Corporations pay about 8%, 8.8% of total tax revenue collected comes from corporations. Of course, we have companies like Amazon that pay no income tax at all. They have billions of dollars in revenue that pay zero income tax. But only if you take and look at total tax revenue of the whole country, only 8.8% of that actually comes from corporations. 57% of all the tax revenue collected comes from average Main Street Americans. So the issue becomes that when you start taking a look at, where tax revenue is and where it comes from and how it's spent, more importantly, then you need to start understanding that where the tax cuts should have been focused, or on the one area of the economy that drives the economy the most, was consumption. Give people more money to spend. They're not going to save it, right? The data is clear. If I give money to the average American, they're going to spend every penny I give them plus some, right? They're going to go into debt. They're not going to save it because saving statistics tell you they don't save it. If I give a rate cut to wealthy individuals, they save it because they're already spending they've got so much money in most cases. They're already spending everything they want to spend. So if I give them additional dollars, they're just going to spend it. I mean, they're going to save it, right? Because they're already spending at their maximum spending. They just don't need to buy another house or another boat or whatever it is. Winnebago. But here's the other interesting thing that's going on right now is if you take a look at what's happening with the very wealthy versus everybody else. There was a interesting comment out the other day. A survey was out that they surveyed all these millionaires. And they said, would you be willing to pay a higher tax? Now, the question, again, you got to be careful with these surveys, right? So the headline says, millionaires all agree to pay more taxes. Well, when you read the actual survey, it says there's a proposal out that people making over 50, that have more than 50 million in assets or making more than 5 million a year should pay more in taxes. That's a very, very small percentage of the economy. The millionaires were none of the people in that group. So yeah, all the people that have $1 million, they're going, yeah, I think those guys with 50 million should pay more. Here's the thing that's so stupid about all of this. There is no law in the world that says you cannot pay more tax if you choose to. The IRS is willing to accept any and all donations without question. So if you feel like you should pay more in taxes and you feel like it's your civil duty to pay more taxes to our government so that they can support more of the low and middle class and give free college education and all this other stuff, you can write them a check. IRS. Sign it, put a digit on it with a bunch of zeros after it. They will take it. They will not even ask you a question why you're sending it to them. And they'll be happy to spend it for you. So if all these millionaires and billionaires really honestly believe that they should be paying more in tax, why don't they just write a check? Nothing's stopping them. They don't have to. Warren Buffett. Yeah, rich people like me, we pay a lower income tax than my secretary. Great, Warren. Quit fighting that $1 billion tax bill you owe and write a check. But see, it's all about talk, right? They talk a good game because they want headlines. They want to be, modeled into the economy. And if you come to me and you ask me, hey, Mr. Roberts, you're a millionaire. Do you think that people with $50 million should pay more in tax? Sure, why not? Not my money. Now, come ask me, Mr. Roberts, you don't make $1 million. You're kind of middle class. You're just like everybody else in the world. How do you feel about paying more in tax? No, I don't want to pay more in tax. I'm already paying everything I can pay. The problem with all of this is that nobody wants to pay higher taxes. Nobody does. And nobody wants to give their money away. Let's be real about this. If we could come up with a zero tax plan, people would be very happy. And, this is kind of something that's been talked about, right? It's called a consumption tax. Get rid of the income tax. Just have a consumption tax. You pay a tax on what you buy, and everybody goes, well, that's not very fair to poor people because now poor people are paying more in tax than they're paying today. That's right, because the bottom 40% of Americans actually have a negative tax rate. They get tax credits, they get rebates, they get all kinds of stuff. The next, between the bottom 40%, which have a negative tax rate, and the next 2 deciles higher, so now we're talking about the bottom 80% of America. The bottom 80% of America pays roughly about 10% of all the revenue, tax revenue. The top 20% of Americans pay almost 90% of all the income tax revenue. So the top 20%, when people are talking about, oh my gosh, taxes are just killing me. Rich people need to pay more. They need to pay their fair share. They're already paying their fair share. They're paying about 90% of all the taxes. And here's the other side about all this. Great, let's tax the rich people more. Rich people, these people that have billions of dollars, millions, hundreds of millions of dollars, it's terrible. These people are big wealth hogs. There's a huge disparity in the economy. And let's tax them more. I used to manage money for a long time for French citizens that were very wealthy. My job was to keep the money out of the country, offshore, so they didn't pay tax on it, because there's an 80% tax rate in France when you include the VAT. My job was simply to make the money outside of France and not take it back in. Capital flows. Capital is liquid. So if you want to tax the rich people a whole lot more, you know what they're going to do? They're going to move their capital elsewhere. They're going to create jobs in other countries, not your job. They're going to create products in other countries, not your products. They're going to deploy and invest their capital elsewhere to avoid the tax, because capital is liquid. So before you jump off this bandwagon that we need to go get our pitchforks and torches and go after the uber wealthy, remember, the majority of those uber wealthy people are the people that basically pay you a salary. We'll see you next time on the Lance Roberts Show, right here at realinvestmentadvice.com.
Money, 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 always Sunday in the rich man's world. All the things I could do if I had a little.
You can get daily real investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at realinvestmentadvice.com.